So I need you to cast your mind back to 1970 and just think about what you were doing in the early 70s. And Pink Floyd had just released Dark Side of the Moon, and that's very topical to lithium batteries because lithium batteries were first developed by NASA in the late 60s to operate on the dark side of the moon. So 1960, go forward to 1990, and portable electronics were just started to be developed. People were looking for a light, energy-efficient battery. Lead acid obviously has a number of problems, mainly because it's heavy and doesn't last very long. So they started to look around for an energy-efficient light battery, and lithium was the technology of choice. So in the early 90s, as people were starting to develop cell phones and laptops, moving forward to 2000, lithium batteries became the batteries of choice for that technology. Move forward to 2015, and if you heard Chris say, the global lithium industry by 2025 is expected to be about $80 billion. Go back to 1970, the global lithium battery industry was about $400 million. So you've seen a huge growth in lithium battery technology and development in the space of 50 years. And just think about that. It's taken 50 years to develop lithium batteries to where they are a cost-efficient, user-friendly technology. So people ask about what is the next technology for batteries? I have no idea. But it was a technology that was developed maybe 30, 40 years ago and will come to the forefront in another 20 or 30 years. There aren't disruptive technologies that can replace lithium in the short term. And that's easy to explain. Anybody who has done elementary chemistry will know hydrogen, helium, lithium. If you want the lightest metal in the world and you want the commodity with the highest charge density, then it has to be lithium. So if you want a light battery, portable, long-lasting, I mean the new EV batteries are going to last 10 to 12 years, then lithium technology is the technology moving forward. So you have lots of sexy cars, and you have lots of people looking at lithium, but really $17.5 billion a year at the moment. Chris said 19, so we're pretty close, growing to 70 billion by 2020, and then growing to about 90 to 100 billion by 2025. This is a significant rate of growth for any technology. We have two cars here. We've got a nice little BMW hybrid. You've got a Tesla electric vehicle. But basically, just the batteries for electric vehicles are growing from 3 billion to 24 billion in a period of 8 years. So portable electronics has been the past. Electric vehicles, hybrids, plug-in electrics are the midterm, and the future we'll talk about in a minute. Lithium supply, where's it coming from? We'll talk about that in a minute. There are only 3 big lithium carbonate producers in the world. 2 based in Chile, 1 based in Argentina. Those 3 are not going to be able to supply growing demand at a pace at which people need it. So where are we? We're in Mexico. We're in northern Mexico. We're just south of the US border, Sonora State. We're an AIM and TSXV listed company, so we're dual listed. What we have is a very, very big lithium deposit. We've just put out a new resource. We put it out last week. But we have over 8 million tons of contained lithium carbonate in the ground. Chris was talking about world supply at the moment. World supply is about 180,000 tons a year. So we, from our deposit alone, have enough to supply the world for the next 200 years. The good thing about our company is we're not just explorers. We explored, and we're now developing. So we spent 3 years drilling a lot of holes in the ground. For the last 2 years, we've been doing actual metallurgical test work, pilot plant test work in Sonora. So we have our own pilot plant. We have our own operations team, and we have taken the lithium from the ground, put it through the process, and produced lithium carbonate in Hermosillo. We have money. We're not looking for money. We've got over $20 million in the bank, so we're fully funded to take the project through the development phase. We have a strong management team. We've got people who have built lithium mines before. We've got people who have operated lithium mines before. We've got people who have sold lithium products before. So we're now investing in the people to develop the project in the future. What we're doing, we have finished exploration. So the press release last week showed that we had increased our indicated resource from 2 million tons to 5 million tons, global resource from 5 million tons to 8 million tons. Exploration is now finished. We don't want to spend any more money or waste any more time drilling out a 200-year resource. So we're moving forward to finish feasibility studies in 2016. All the work that we have done internally, we are now starting to externalize. So all of our metallurgical test work is being done by SGS Lakefield in Canada. All of our mine designs are being done by IMC Mining out of Tucson. All of our resource numbers were done by SRK out of London. All of our process engineering is being done by Ausenco engineers out of Australia. So a diversified group of consultants who are the best in the world. So the best lithium process engineers in Australia, the best metallurgists in Canada, the best geologists in the UK. We're looking for the best consultants to give us the most reliable, the most predictable feasibility study numbers. We're developing a two-stage initial project. We want to bring the first stage on at 17,000 tons a year. And 17,000 tons a year is an important number because it's what the market will absorb. There's no point bringing on a mine that's going to produce 100,000 tons of lithium carbonate a year because the market will not absorb it. We're going to bring on just under 10% of supply, which is what the annual market is growing by. So every year, the lithium market needs about 17 to 18,000 tons a year. We want to bring on a mine that will fill that gap in 2018, and then we want to expand it to 35,000 tons in 2020 to fill the next gap in the market. So by 2021, we want to be the second largest lithium producer in the world, and we still want to have the ability to expand if demand continues to rise past that requirement. So 17, 35, 50,000 tons, that's our growth profile. Lithium carbonate is the product. So everybody talks about lithium-ion batteries. They predominantly use lithium carbonate as the cathode for those batteries. So 80% of the world's batteries use lithium carbonate, but 20% use lithium hydroxide, another lithium commodity. So our main project is based on lithium carbonate, but we're looking at lithium hydroxide as well. And this is the reason why lithium demand is growing so strongly. So that's that. So the cell phone, Chris held up a cell phone and said, this is the future. That uses about 3 grams of lithium carbonate, and it lasts about, well, a good battery, maybe 2 years, a bad battery, 18 months. So you're replacing that battery every 18 months to 2 years. Then you've got a laptop that uses about 30 grams, and you're replacing him, again, every 18 months to 2 years. So portable electronics, those two, have been the base load for lithium demand growth since 1990. But where we're moving now is we're moving into vehicles. So you have hybrids and EVs. So if you have a hybrid, then roughly 7 kilos of lithium carbonate go into a hybrid. So you've gone from 3 kilos to 30 grams, 3 grams to 30 grams. Now you're at 7 kilos. And if you own a Tesla, then a Tesla has about 25 to 50 kilos of lithium carbonate in its battery. And these batteries are guaranteed from 5 years to 10 years, depending on who the manufacturer is. So more lithium, longer life. And once you talk about energy storage, once you start talking about renewable storage, grid storage, then it's these big batteries. So that's a 1 megawatt battery. And there's 17 of those batteries in a line there. So that's a 17 megawatt battery. It's on a renewable plant in Nevada. It's on a wind farm and solar farm. And each one of those 1 megawatt batteries has half a ton of lithium carbonate. So your growth is grams to kilos to tons as energy demand, as energy storage becomes more and more critical. And what that is doing is it is dropping the price of batteries. So if you had bought a lithium battery 10, 15 years ago, you would have been paying about $3,000 per kilowatt hour. So expensive. But as the number of batteries has increased, as technology has improved, then the cost has come down. And now you're sitting at somewhere around $200 to $280 per kilowatt hour. The magic number is $150. So once lithium batteries get to $150 per kilowatt hour unit construction cost, then they are cost competitive with lead acid. So a lithium battery will be just as cheap as a lead acid, it will be much less polluting than a lead acid, and it will last far longer than a lead acid. So you will start to get transmutation of lead acid batteries into lithium ion batteries. And if you've seen the announcements from Tesla and from LG and from Samsung, all the big future battery manufacturers, they are looking for lithium battery prices to be sub $80 per kilowatt hour. So by 2020, then the cost of a lithium battery will be sitting down here, and it will be significantly cheaper than a lead acid. So you're going to see a significant uptake in lithium demand moving forward. So what has that done to the price? The price has been nice. Since the early 2000s, the price has risen from about $2,000 per ton of lithium carbonate, currently trading at somewhere between $5,500 and $6,000 a ton. So if you look at an iron ore price, or if you look at a coal price, or if you look at a gold price, or if you look at a nickel price, I could keep going, that has gone down over the last 10 years. Lithium prices have continued to rise. And that is because of that increased demand from transport applications. And this is the future. This is where the world is heading. We talk about renewable energy, and it is a growing source of energy, and it will be, over the next few years, an increasingly important source of energy. How do you store energy from a renewable source? If you are a solar farm operating in Nevada, and you want to generate energy 24/7, what happens when the sun goes down? You have a problem. So basically the time efficiency of a solar farm is about 6 hours a day. If you want to supply energy to the grid 24/7, you need to store excess energy that's produced during the day and sell it into the grid on peak, off peak, and at night. So that's where these big batteries come in. So these are solar arrays feeding lithium batteries. This is a wind farm and solar array feeding a lithium battery. This is the Tesla Powerwall that's going to take power from solar on the roof. So this is the future. This is how you're going to continue to develop 24-hour continuous renewable energy on both a macro grid, which is on a citywide basis, and on a micro grid, which is on a house or community basis. This is the way the world is going. And to do it, you need lithium to form the cathode to make the battery. So we talked about where we are. We are in Sonora. The nice thing about Sonora is it's infrastructure rich. So good roads, good rail, good ports. The thing about developing a new project, a new process, a new mine, is that you don't want to spend billions of dollars building power lines, building rail lines, building ports. So we are lucky. We have power running through the site. We have power within 4 kilometers of the site, so that's high voltage energy. We have a rail line within 60 kilometers. We have a port within 350 kilometers. So all of the major infrastructure is already in place. So timetable to development is relatively quick compared to other projects. And what we have is a very big resource. We've got a lease area that covers 100,000 hectares. It's on private land, and we have agreements with the landowners for access and ownership, so we don't have problems with ownership of the project. We want to be able to show that we can grow to 50,000 tons a year, but we want to show it in staged steps. We want to go 17, 35, 50. We want to be able to grow into the demand cycle. Chris spoke about offtake. Offtake is key to this. If you're going to fund a long-term lithium project, you need to have at least 3 offtakers. We've already signed up 1. They were signed up a couple of months ago. We will sign up another 2 in July, August next year. And those 3 offtakers will form the basis of the funding package to build the mine starting in 2017. Big resource. It conforms to Canadian NI 43101 standards. It conforms to JORC standards. So you've got 5 million tons in the indicated category, and you've got another 3-4 million tons in the inferred category. So it's a big resource, and it could be bigger if we wanted to. We just don't need to grow it anymore. The nice thing about it is it comes to surface. So we have 2 clay bands that come out of the ground and actually appear on surface. And if you look at the lease, if you stand at the north end and look to the south end, it stretches for about 7 kilometers. So we have these 2 clay bands sticking out of the ground, stretching for 7 kilometers north-south. So it's an open pit mining operation. It's got a low stripping ratio. And because it's a clay, it's relatively easy to dig and take out of the ground. Resource numbers, we're going to mine about 1.5 million tons of clay a year. We're going to upgrade that to a concentrate that's about 0.7, 0.8% lithium, and that will produce us our 17,000 tons a year. So 1.5 million tons of clay, producing about 17,000 tons of carbonate, and for stage 2, about 2.5 million tons of clay, producing 35,000 tons of carbonate. So this is not a big operation. This is not an operation that's going to cost billions of dollars. It's a relatively small mining operation by world standards. And then when you look at demand, this is where demand is going in the future. So we spoke about 2015. Current demand is about 180,000 tons a year, give or take. That's growing to about 220,000 tons by 2020, and somewhere around 300,000 tons by 2025. So that's a significant demand growth. Basically, the demand for lithium is going to double in the next 10 years. That's very unusual for any commodity. You don't see that in iron ore. You definitely don't see that in copper, silver, lead, zinc. Demand driven by these guys here. And these guys are vehicle batteries, whether it's a hybrid, whether it's electrical, whether it's a plug-in. So you need a big resource to be able to demonstrate to off-takers and to investors that we're going to be around for the next 200 years, and we are a significant provider of lithium to the lithium industry. We have a hands-on team. We've got a team that's been in the lithium industry. The longest is Eric Carter. He's been building lithium mines for the last 25 years. I've been doing it for the last 10 years. Stefan, 12 years. Dominic, 8 years. We've got a group of people who have been building lithium mines and a number of lithium mines for a long period of time. And that's the core group of people that have been working on the feasibility study, will be involved in the final design, and then we'll run the project moving forward. So we're building an internal team that will take the company from design, construct, commission, operations. And we've done it by building our own plant in Hermosillo. So this plant here is a small-scale lithium carbonate plant. It can produce about a ton of lithium carbonate a week. So it's a small plant. We're looking to build a plant that does 17,000 tons a year, but this demonstrates that the process works. So we're currently upgrading this. We're moving it from a ton a week to a ton a day. So we'll be producing a ton a day of product by March, April next year. And that material will go into the off-takers for test work to demonstrate that we can produce a continuously repeatable, high-quality product. So pilot plant, off-taker, and then the off-taker will provide not just an off-take to buy your product, but will also provide funding to help build the project. Off-takers are looking for long-term security, quality supply. And that's why it takes us about a year to go from pilot plant to sample to off-taker. The process is called the sulfate process. The process has been around for 80 years. Originally developed by the Swedes and the Germans, you take your lithium Li out of the ground, and you have to convert it from a lithium oxide to a lithium sulfate. So you add SO4, and you tend to do that by adding acid or gypsum. And then you take your lithium sulfate, LiSO4, you throw away the lithium, the SO4, and you add CO3 to make Li2CO3. And lithium carbonate is the building block of all cathode materials for lithium batteries, Li2CO3. That's the lithium ion that people talk about in batteries. So that process has been around for 80 years. We're not reinventing a whole new process. We're using proven technology. What does it cost to produce? It depends. There are three main types of lithium production. There are the brines, which are mainly in South America, and they produce lithium carbonate for around $2,000 to $3,000 a ton. You have the clays in Nevada and Mexico, cost of production somewhere from $2,500 to $3,000 a ton. And then the hard rock mines in Australia and China producing from $3,000 to $5,000 a ton. So in Sonora, we're going to be in the middle. We're not going to be the cheapest. We're not going to be the most expensive. We're going to be a long-term, reliable producer that's going to produce for sub $3,000 a ton, and it's going to be selling for $6,000 a ton. So we're looking for 100% margin on our production. At the moment, and I think this is true for the next 10 days, we're the only AIM-listed lithium stock. There's another lithium stock listing on the 8th of December. We are the most advanced lithium stock on AIM. We're the only one with a 4310 resource that is close to production. We want to be in production within the next 18 months. Proven management team, strong board. The board of Bacanora has been in the mining industry for the last, well, on average, I think about 25 years, have built and funded a number of mines. We have about 6 key shareholders who control about 60% of the company, anything from 10 to 17%. So a strong board, strong shareholder base, and a share price that's kept reasonably steady for the last 12 months. A few ups and a few downs, but we've traded fairly well compared to the majority of our peers. Market cap, about £80 million. So, large scale. Just keep on remembering large scale. It's a large scale project that will last out a number of cycles. High grade, stable jurisdiction. We have cash. We have $20 million in the bank. We don't need any more. And we have a sales agreement in place. We're looking for 2 more. So I'm happy to answer any questions. Sure.
How water intensive is the process of turning the rare mineral into actually crushable?
How water intensive?
Water intensive, yeah.
You recycle the majority of your water. So it takes about 1 ton of water per 1 ton of clay, but about 85% of that is recycled. So your consumption is only 0.15 of a ton per ton of clay. So it's not particularly intensive once you set up the recycle process. And in Sonora, in Mexico, there is a very significant subterranean water supply, so we have more than enough water to feed the plant.
Is there any political risk associated with operating in northern Mexico, particularly as the oil and gas side opens up, and there's concern that there's a potentially increased instability coming as more Americans practice?
I think you should direct that to General Motors USA. So General Motors have their largest plant outside of the US in Hermosillo. It's about 100 kilometers from where the mine is. They've been operating in northern Mexico for 30 years and are now expanding to make a hybrid lithium vehicle in northern Mexico. Grupo Mexico, the third largest copper producer in the world, has 2 big projects just north of us. So northern Mexico is, I would say, reasonably stable. If you look at the Forbes list of stability of 130 countries, I think it's number 17 or 18. So it's a moderately low political risk. So the question is, what is the potential for our competitors to expand production? So there are 3 big lithium carbonate producers, 2 in Chile, that's SQM and Rockwood Albemarle, and FMC in Argentina. The 2 in Chile are located in the Atacama Desert. They require a lot of water for their process. Where we require 0.15 tons per ton, they would probably require 5 tons of water per ton of product. And they are struggling to find water for their process. So the 2 in the Atacama are probably expanding by 1 or 2% year on year. So quite small. FMC in Argentina actually has a lower production profile this year than last year. They've had some technical problems. So growth in the industry is coming from new participants. It's not coming from expansion of existing mines. And you have one new player coming into the market. You have a company called Orocobre, which is an Aussie company developing a project in Argentina. They built it last year. They're commissioning next year. They will bring on 15,000 tons. So that 15,000 tons will fill the market for 2016 and a bit of 2017. There needs to be a new project in 2018, and that's Bacanora. No, Bolivia has the largest lithium deposit in the world, Cerro de Uyuni. It's also the most complicated lithium deposit. It's got a lot of magnesium. So if you look at the projects in Chile, they have magnesium-lithium ratios of about 2 or 3 to 1, whereas Bolivia has a ratio of about 20 to 1. So you have to take out a lot of magnesium to produce the lithium, and therefore it's not cost competitive and it's not quality competitive. So it's got a lot, but it's not economic at the present time. Out of time? Sure. Sorry, I've got to stop, but I'll come and talk to you. So in the ground, we're 0.3 to 0.4, and we're upgrading it to 0.7 Li. So we're doing a 1.5 times upgrade. Yep. Oh, of lithium, 99.5% Li2CO3.